All right, good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of January 26, 2023. Good to be with you. Just wanted to spend a couple minutes today going over some things. We've got, looking forward, we have a rate hike decision Wednesday of next week. And really, in addition to that and our earnings, obviously, this was from last week, as usual. We're looking to have positions protected for those events. So what's happened the last week? We've had some earnings. Tech stocks have not done incredibly well. We can come back to Visa, but Microsoft came out with their earnings, fell big yesterday, and they popped back up to the day. They're another one of the tech stocks, tech companies like Google, Amazon laying off a bunch of people, Meta. So a little bit of a surprise to see it bounce back so much as far as Microsoft goes, but I'm glad we took the time to roll up a couple days ago, roll up our protection on some of our tech stocks, Apple and Meta and Google. I think that was smart. We might even have to do it again, or if things continue to hold up well, like for Apple, we might just continue to leave them up. I think we moved Apple from 135 up to 140, I think. I'm trying to remember. Let me see. So here is what we've got. Apple, yes, up to 140. Let's see, what else did we move? Meta was at, I think it was at 134, 135, and we moved them up to 142. So a big roll up on the strike price there for Meta. Let's take a look at Meta real quick. Oops, not Meta. There we go. So our tech stocks have been on quite a nice run. And we might even get up on Meta to the 200-day before earnings. But quite the run in those ones. Let's see, what else did I say? Google. A little bit different. Hasn't quite had a consistent run like the other two I just showed you. We do have a few people in Google, and we moved up to 95 from, I think, 91. So just a smaller bit there. We did that yesterday. Probably should have done it in retrospect when it was hitting up here by 100, but you know, it was on a tear for a few days, so we were letting it go. And man, what a huge drop down to the 50-day. Looking like more of a reversal, but that was kind of the reaction from Microsoft, I think. And we just wait and see where those go. And I'm glad we moved those up. We've got, as I mentioned, our rate hike decision next week, which could be the big mover, obviously, as usual. Been the most important thing to be paying attention to. And you've, I'm sure, heard Kevin talk about it, but the thing to watch for there on the FOMC meeting is obviously what they say about it, but if we get a quarter point rate hike, that signals to the market that we are slowing down in our rate hikes and just starting to level off, and the market will likely continue higher. If we get a 50 basis point rate hike, it might look to the market that the Fed is still being aggressive. Give me just a second. Gotta close my notifications while I'm on a webinar, of course. If we get a 50 basis point rate hike, I'll see the market will be surprised as it expects a 0.25% hike and may fall. And of course, either of those situations all depend on it as well what the Fed says. They say we are liking how unemployment is cooling down, or excuse me, employment numbers are cooling down and that sort of thing. And they are confident in what they call a soft landing, where they're not raising rates too quickly to cause a recession. That kind of talk, it might be okay if we get a 50 basis point hike. But I would think it would be quite a surprise, as the market does seem to be pricing in a 25 basis point rate hike. So anyways, that's what we're looking at. We'll see what they say. Market obviously doesn't like to be surprised, and they're really hoping for the Fed to really start slowing down their rate hikes. I still feel like my personal feelings are that they will still do a 50 basis point rate hike, because even though we've had some employment big companies let a bunch of people go. They still have thousands and thousands and thousands of employees. And their main concern, obviously, is inflation. And we may even get another one in March or May. Excuse me, May, not March. And Fed Powell has said on numerous occasions we aren't going to stop until we really see inflation start to come down. And with the oil situation coming up, they really that helped a bit. The government put out a bunch of barrels of oil from the strategic oil reserve, and that has pretty much been used up outside of getting rid of all of it. So that strategy was never a long-term strategy. It was a short-term band-aid on a massive, huge, gaping wound. So yeah, I wouldn't think they would be slowing down quite yet. I think they really need to start seeing more from inflation to really do that. So yes, and I said February, March, and May, and got myself confused. But yes, it is February, which is next week, March, and May coming up. Questions on that? Talked about Boeing coming up, and that was last week, and we had that yesterday. So unfortunately, Boeing missed its numbers. Got a question in, what will the market do with a 50 basis point rate hike? My thought is that stocks may fall as they're expecting 25 basis points. And so that will be a bit of a surprise. Is that what you're asking about? Okay. All right, back to Boeing. They missed their numbers, but sold a lot of planes, and their plane sales are ramping up quite a bit. Their losses were very much smaller than what they were up against the year before, excuse me. So things are definitely coming around and big progress is being made for Boeing. Kind of lame that they missed their numbers, but so far it looks like the market is somewhat okay with it. I think they said they're looking to be cash flow positive by the end of the year, and they expect it to be. And that has kind of been the huge big thing, is their cash flow. So around this 215 price level, it's been hard for them to get over. Look out a little further. This is a 2-year chart. It's hard to see much preventing them from getting over that. And this is less important as it's, over a year away, year back. But right now, that's kind of the price resistance level. And looking at the 2 years back here in 21, it was a lot more volatile, a lot more spikes and dips. And you can see as we started to turn the corner here, even though we kind of went up big in the summer last year and down in the fall, at least we didn't get these ridiculous huge moves up and down. Kind of a little bit more stable. And man, we've had such an awesome run up for Boeing. I only wish we would have did more in buying leap calls through this period. That's Boeing. Any questions on Boeing? Let me see if I missed anything. Maybe we can look at a couple numbers. Loss of 663 million for the quarter to December 31st, compared with a deficit of 4 billion a year earlier. So 600 million's a lot of money, but 4 billion is quite a bit more. Sales rose 35%. So closing that $4 billion gap to 600 million is pretty significant. All right. We talked about the pullback from last week, and it's pretty much gone back up this week. We were looking at it breaking this 50-day, and I had mentioned you might be looking at adding some SPY puts, and I hope you waited like I told you to wait if you were looking at doing something like that, because we stopped here on the pivot point, bounced right back up, right back above the 200-day. So the market is trying to fight that, is trying to hold up, and really at this point, aside from the earnings, the main thing is our rate hike decision now next week, obviously. We talked about Goldman Sachs and some of the banks. Their wealth management sucks. If you're at Goldman Sachs, come over to Hurley Investments. What else did I want to talk about? Those were the main things. Kevin had mentioned last Monday of a trade for JetBlue that you could look at a bull call, leap bull call, 850 long call with a 10 or 11 strike short call. Let's take a look at where JBlue has gone. It's fighting that 200-day, so technically, if you were maybe looking at something like that, now that we've had a few days to kind of see where it's at, what it's doing, you might wait until it gets over that 50-day before you do that. But let me see. I think they probably had their earnings, so let me. Question came in. Let's see. Do you buy puts for earnings about 1 week out and at the money? With the up and down market over the last week or so, how do you handle exit entry decisions? So let me get to that. Jeff asked that. How do we protect for earnings? Usually we go about, we usually put protection on around 2 weeks before earnings, unless the stock is having a great earnings, let's see, a great pre-earnings run. We might wait till closer. We've even done it the day before sometimes, but the rule of thumb is you go 2 weeks prior to when the stock reports. The 2 weeks before is when you put on the put. You don't have a 2-week long put that only lasts 2 weeks until it expires. I'm not saying how much time you're buying. I'm saying when you're buying that put, usually 2 weeks before. And the reason for that is once you get closer to earnings, volatility kicks up a little bit. And the reason for that is volatility makes those puts and options in general more expensive. And stocks will get a little more volatile around earnings time. And we will buy around 5 or 6 weeks of time. So we'll go out a little over a month. Once you start getting too close to a month where you're in the month of expiration, you start losing time value, time decay. Let's see, what else did you ask? Jeff, your question disappeared. I don't know why. Yeah, that's weird. Sorry, Jeff, if you want to type it in again, that's fine. I'll just try and remember what you're saying. But basically what we're looking to do is go out 5 or 6 weeks and buy an option that expires in that amount of time, giving us a week or two before we're hitting that expiration month. And we're putting that on about 2 weeks prior to their earnings event. So you got to be forward looking to see where their earnings report is and making plans far in advance, obviously. And yeah, when we put them on, it's typically at the money strike prices. And sometimes, like you heard me just talk about, we if it continues to run up, we decide whether or not we're going to roll those strike prices up with them. So right now, when we're seeing tech stocks maybe not doing well for their earnings report, laying people off, our thought was, okay, let's start to roll up our protection as these stocks have run up after we put the puts on, which when we bought them, it was at the money, but as they've gone up, we've rolled them up to at the money to have a little better protection. Sometimes, like for Boeing and Baidu, that we expected to do better this time around, we'll probably run those a little bit out of the money as they've come up above where our strike prices were, expecting that if they do well, you know, we don't want to spend more money to roll those puts up, and we'd rather have the protection there a little lower, and yeah, make a little more money on the way up. And then you ask, how do you handle exit and entry decisions? Let me just write a note. exit and entry positions, I assume you mean like after earnings, maybe. Uh, so an example would be today or yesterday when Boeing reported they fell down that morning. So obviously we weren't thinking about taking protection off yet, but as they've held up, it hasn't necessarily taken off either to the upside. So we've kept that protection on just to give us time to see what that stock decides to do. And we can afford ourselves to be patient there. Um, if they have a blowout earnings, good earnings, and you know, we look at the next morning and we will typically take protection off pretty quick. So it's less technical for earnings and a lot more fundamental, because obviously that's where you learn your more fundamental more of the fundamentals about your company, about the stock after they reported, obviously. Your other question, do you lose money on the roll up? Yes. So yeah, if the stock has run up after you put the protection on, your protection will be worth less. It's not going to be dollar for dollar less. It will be, whatever the delta is, which tells you how much money your option makes or loses for every dollar of the stock movement. So yeah, it will lose a bit of money. It's still protection. It's still there. If it comes down, it will gain that money back. But so that's why we look to possibly roll up, is if aren't we don't have a huge amount of confidence the stock is going to have a good earnings report, we're more apt to roll it up to at the money and take a little bit of a loss on the puts on that roll up, with the thought that we'll be better protected if it comes down after the earnings run, after the earnings report rather. So let's say you bought a put and it cost $5 a share, and the stock is trading at like $100. If it goes up to $105, your puts, depending on the delta, is going to be worth like $3.50. So you have to decide, do you roll it up $5 of strike price, and you just do your math and decide if it's cost effective. Are you going to be able to, is it going to cost less to roll it up than the amount you're protecting for? So if it only lost $2.50 and you're protecting $5 more, hey, that math kind of works out. Let's do that. Or if it's gone up a little bit and it costs more than the amount you're protecting. So let's say it's gone up $5 and you had your puts cost like $8 and you've lost like $6. This isn't a real scenario in the terms of the numbers I'm using, but it can happen where you'll lose more money trying to roll it up than you're actually protecting. Does that make sense, Jeff? Well, it's going to look at JetBlue. So I'd heard they missed some of their numbers. Let's see, where is he talking about JetBlue? Oh man, why did they have a conversation? I just want to know the numbers. So stupid. So they beat their numbers by 20, let's see, by 3 cents, up to 22 cents per share. Revenues they beat on. Yeah, so I'm not sure why they're not heading up more. William, you had said that they missed their numbers. I'm not seeing that. Maybe you can point me to something you were seeing. Either way, though, I'd be waiting on what they do with this 200-day moving average, and it doesn't look like it's a very positive reaction that we would have hoped for from their earnings. Guys, is there any other thoughts or questions you wanted me to go over? If we roll up, the math has to make sense. We need to be gaining more dollars per share that we are protecting than we are spending to buy higher strike price. Hopefully that makes sense. All right, guys, I'm not seeing any other questions, but thanks for joining me this morning. And it'll be exciting to see what happens next week with our rate hike. Again, my feeling is that we're still looking at 50 basis points and watch the market fall on that news. Yep, thanks, Jim. Thanks, Jeff. We will see you guys next time. Take care.